People keep saying Florida's real estate is untouchable, like it's some unstoppable money-making machine under palm trees and neon sunsets. But here's the truth nobody wants to admit: in 2025, some Florida cities are sliding straight into a housing meltdown. Behind the pastel houses, beachy vibes, and influencer sunsets, the warning lights are flashing bright red. Prices aren't cooling, they're slipping. Insurance bills, they're exploding like fireworks. And inventory is stacking up at a rate Florida hasn't seen since before the last crash. So yeah, the sunshine is still warm, but the market? Not so much. And if you're wondering whether your city might be next, or if that dream home might flip into a financial landmine overnight, stick around. In this video, we're breaking down the 10 Florida cities where the housing market isn't just wobbling, it's cracking wide open. This isn't some tiny dip, it's a full-on shakeup that could flip the Sunshine State upside down. If you're watching because you want to stay ahead of the fallout, you're in the right place. Go ahead and hit subscribe, throw a like on this video, and tap that bell so you never miss another deep dive like this only here on Discover the Nation. Number 10 on our list takes us to Fort Lauderdale, Florida. Fort Lauderdale, South Florida's flashy playground has been riding high for years. Boats, beaches, nightlife, investors snapping up condos like candy. But heading into 2025, the cracks are getting too big to ignore. For a long time, this place was the sweetheart of snowbirds, landlords, and remote workers hunting for ocean views. Now, the winds have shifted fast. Listing inventory has popped more than 80% year over year. Homes that pulled $650,000 2 years ago are now sitting around $580,000, and even with those price cuts, they're just sitting. The days of a home being listed on Friday and sold by Sunday? Long gone. Some are lingering for months. The biggest gut punch in Fort Lauderdale is insurance. Coastal exposure is hitting homeowners hard. The average homeowner is paying more than $7,000 a year just for insurance, a jump of roughly 50% since 2022. And if you in a condo with an HOA, those fees are ballooning too, many crossing the $500 a month mark. Combine those costs with high interest rates, and you can see why affordability is basically falling off a cliff. Investor activity has dried up. Around 30% of investor-owned condos and homes are on the market for less than their original purchase price. A whole crowd of sellers is trying to cut their losses before the ground slips any further. Even Airbnb owners, once raking in crazy profits, are struggling. Occupancy rates are down roughly 12%, and nightly rates are softening too. So yeah, Fort Lauderdale still photographs like $1 million postcard. But under the glossy surface, the foundation is shaking. Would you still buy in Fort Lauderdale in 2025? Drop your thoughts in the comments, especially if you live there, and hit subscribe if you haven't already. And trust me, the next 9 Florida cities, things only go downhill from here. Coming in at number 9 is Cape Coral, Florida. Cape Coral, nicknamed the Venice of America for its endless canals, was once one of the hottest destinations for Florida-bound buyers. But heading into 2025, those calm canal waters, not so calm anymore. This city is knee-deep in one of the sharpest corrections in the state. Prices are now down around 5 to 7% year over year, and homes are sitting for more than 70 days on average. So what caused the slowdown? One giant word: overbuilding. Between 2021 and 2023, Cape Coral saw a flood of new construction. Builders couldn't put homes up fast enough. Local buyers are feeling boxed out. Out-of-state buyers have cooled off. The local economy, heavily tied to construction and tourism, just isn't strong or diverse enough to keep the market pumping. Cape Coral still looks like paradise on the surface, but underneath the palm trees and canal views, 2025 is looking like a slow-motion warning sign. Hit the like button if you're watching from Cape Coral, or if you've been seeing the price drops firsthand. And don't go anywhere, 8 more Florida cities are coming up, and trust me, the deeper we get into the list, the worse the cracks get. Subscribe now so you don't miss what's next. Number 8 brings us to Ocala, Florida. Ocala, the horse country capital, with its rolling pastures and quiet charm, became a pandemic here, a magnet for people who wanted space, affordability, and a slower pace of life. But in 2025, that charm is getting overshadowed by a market that's spinning out. The inventory situation here is flat out wild. Active listings have jumped from around 800 to nearly 3,000 in just over 2 years, a jaw-dropping 275% surge. That isn't normal growth, that's oversaturation on steroids. So why this sudden freeze? It's a perfect storm of too much building and not enough buyers. Developers jumped in fast, scooping up cheap land and banking on migration trends that ended quicker than expected. Now entire pockets in communities like Silver Springs Shores look half-occupied, almost like modern-day ghost subdivisions. The affordability that once defined Ocala has evaporated. Between 2020 and 2023, home prices soared over 55% while wages barely budged. Insurance premiums surged right alongside everything else. Local jobs rooted in manufacturing, agriculture, and warehousing have slowed down too, leaving fewer people able or willing to jump into homeownership. Ocala still has beautiful trails, wide open greenery, and that laid-back vibe, but the 2025 housing market, it's staggering under the weight of its own growth. Too many homes, not enough buyers, a tipping point that's hard to ignore. Think Ocala is still a hidden gem or has the shine worn off? Let us know in the comments and make sure to subscribe so you can see which Florida city cracks next, because trust me, we're not done. Number 7 takes us to Tampa, Florida. Once the crown jewel of Florida real estate, Tampa's red-hot streak is finally cooling hard. In the last 2 years, active listings jumped from under 3,000 to more than 4,500. That's roughly an 80% surge. Builders got overconfident and overbuilt, banking on demand that just didn't hold up. New condos, subdivisions, waterfront projects, they went all in. But now that inventory is sitting still, collecting dust as buyers vanish from the scene. With mortgage rates floating around 6.8%, Tampa buyers are staring at monthly payments that feel like a slap in the face. Homes now average 40 for days on the market, double what was typical during the boom. Realtors are offering fancy concessions, closing credits, rate buy-downs, you name it. But buyers aren't biting. Tampa still has sunshine, waterfront views, the sports scene, the nightlife. But the housing market, not sparkling like it used to. If you're in Tampa, what's the vibe in your neighborhood? Drop your thoughts below and hit subscribe because the next 6 cities will surprise you. Sliding into number 6 is Jacksonville, Florida. Jacksonville, Florida's biggest city by land area, is now showing the biggest fractures it's seen in more than a decade. In 2025, Jacksonville's active listings have jumped to nearly 4,000, up from just about 2,200 in 2023. That's the highest level in years, and the weight of that supply is pulling prices downward fast. What's behind the unraveling? A classic combo: too much building and prices that overstretch the local economy. Builders went heavy in suburbs like Orange Park, Middleburg, and Nocatee, anticipating waves of buyers. But when interest rates ballooned toward 7%, the beer pool dried up overnight. What felt affordable just 2 years ago now feels painfully out of reach. According to multiple analyses, Jacksonville is significantly overvalued, and with its economy leaning heavily on logistics and shipping, the slowdown is hitting hard. Jacksport volumes have dipped over 10%, causing ripple effects in paychecks, hiring, and loan approvals. Insurance rates, especially in flood-prone pockets, have spiked around 60%, shrinking budgets even further. Then there's the investor problem. Roughly 1 in 5 homes is investor-owned, and many of those investors are slashing prices as they rush to exit. Whole neighborhoods are filled with price-reduced signs. From the St. Johns River to the suburban outskirts, Jacksonville's sliding into a deep correction, one that likely won't snap back quickly. If you're in Jax, tell us what you're seeing on your block. And don't forget to subscribe because the top 5 cities are coming up next, and they're the most vulnerable of all. Rolling into number 5, we land in Sarasota, Florida. Sarasota has always been that mix of white sand beaches, artsy charm, and high-end living, a place retirees dream about and investors brag about. But in 2025, the vibe isn't matching the postcard anymore. The luxury market that once ran at full speed is finally hitting the brakes. Inventory has more than doubled in just 2 years, climbing past 3,700 active listings. Those waterfront homes that used to pull $1.20 to $1.3 million without breaking a sweat? Now they re-hovering closer to the mid-900s, and they re still sitting on the market like nobody else in a rush to buy. Back in 2022, Sarasota was nearly 40% above its fair value, and that balloon finally popped. The core buyers who kept this place alive, wealthy retirees, out-of-state cash buyers, investors with deep pockets, aren't swinging like they used to. Inflation and market turbulence in 2020 drained confidence. People with big retirement accounts aren't as quick to spend, and investors don't want to carry expensive coastal properties with climbing insurance bills. Speaking of insurance, waterfront premiums here are no joke. Many homeowners are paying between $8,000 and $10,000 a year just to stay insured. Combine that with interest rates brushing 7%, and even well-off buyers are hitting pause. Homes now sit an average of 90-plus days before anyone bites. Realtors are pulling out all the stop staging parties, giving credits, offering fancy closing perks, pouring wine at open houses, but none of it is sparking the frenzy Sarasota used to see. Don't get it twisted, the beaches, culture, and lifestyle still slap. But in 2025, the housing market has flipped from seller's paradise to a beer's playground, wearing a luxury price tag. If you've seen price drops or empty open houses in your neighborhood, hit the comments and let us know. And don't forget to subscribe if you want to stay ahead of every twist in this Florida housing roller coaster. Number 4 is Port St. Lucie, Florida. Port St. Lucie exploded during the pandemic because it hit the sweet spot: affordable, suburban, clean, and close enough to the coast to feel like a dream. But 2025, different story. Right now, PSL is officially one of the most overvalued housing markets in the entire state. Analysts say home prices here are sitting more than 40% above long-term fundamentals. Inventory is up over 35% year over year, and builders are sweating. Homes listed for around $430,000 last year are popping back up at around the mid-360s, with builders tossing out incentives like candy at a parade. Want closing cost help? Done. Want upgraded appliances? Sure. Want a rate buydown? They'll try it. Demand just isn't there like it used to be. Port St. Lucie is also dealing with growing pains. Schools are packed, traffic is rougher, and utility systems are feeling the weight of the recent population surge. What used to be a relaxed alternative to South Florida is now becoming a strain for long-timers and new residents alike. And insurance, that's the knockout punch. Waterfront homeowners are paying $6,500 or more a year in premiums. For a lot of buyers, that bill alone kills the deal before it even gets started. Port St. Lucie still has sunshine, nature, and suburban calm, but in 2025, the housing dream is hitting a very real wall. If you're seeing price cuts or listings piling up in your neighborhood, share your thoughts below. Number 3 takes us to Fort Myers, Florida, a city that went from boom to burnout in record time. Fort Myers was one of the hottest markets during the pandemic wave. Between 2022 and 2024, home values shot up more than 65%. Prices are down around 6% year over year. Inventory has ballooned from roughly 3,200 listings to over 5,000. Homes are sitting for 60-plus days, and sellers are trimming prices left and right. Contracts are falling through before closing. It's messy out there. Insurance is the biggest monster lurking behind the scenes. After Hurricane Ian, premiums skyrocketed. Now, even homes outside of flood zones can see annual premiums between $9,000 and $11,000. And inside flood zones, forget it, buyers are running in the opposite direction. The rental market isn't saving anyone either. Tourism slowed, short-term rental revenue dipped, and a lot of Airbnb owners are trying to jump ship before losing more money. Affordability is out of sync all across the board. Median incomes are still under $60,000, but home prices don't reflect that reality. It's a mismatch that can't sustain itself, and now the market's feeling the consequences. Fort Myers still has charm, sun, beaches, lifestyle, but the sky-high housing boom, that chapter is over. If you've lived here or sold here recently, share your experience in the comments. Two Florida cities remain, and they're the most fragile of all. Number 2 brings us to Orlando, Florida. Orlando's one of those cities people think can't lose: theme parks, tourism, new residents pouring in every year. But even giants stumble, and in 2025, Orlando's housing market is wobbling harder than it has in over a decade. Prices have already dipped more than 5% year over year, and the slide isn't slowing. Inventory jumped from about 4,500 active listings in 2023 to nearly 7,000 now. That's a massive shift for a city that once had buyers clawing over each other to snag a listing. The biggest issue: wages simply can't keep up. Insurance premiums have gone up about 50% since 2020, and even though Orlando isn't coastal, the entire state is paying the price. It's scaring away first-time buyers and pushing investors toward cheaper states with calmer insurance markets. Rental demand isn't saving the day either. As more apartments open and short-term rentals get hit with stricter rules, rents are starting to flatten. Investors who bought expecting endless tourism gold are finding out the hard way that those returns aren't guaranteed. Orlando still has the magic, literally. The theme parks, nightlife, booming entertainment scene, they're not going anywhere. But the housing market, it's losing its sparkle fast. If you're in Orlando, let us know what you're seeing in your neighborhood. Price cuts, longer listings, empty open houses? Drop your take in the comments. And finally, the number 1 Florida city where home prices could crash the hardest in 2025, Cape Coral. Cape Coral is staring down one of the toughest corrections in the entire state. Prices have already fallen more than 10%, and the root of the problem goes back to one word: vulnerability. Cape Coral was hit brutally hard by Hurricane Ian, and the city hasn't bounced back the way people hoped. Insurance premiums are skyrocketing. For a lot of coastal homeowners, annual premiums are now pushing $12,000 or more. Even homes several streets away from the water are seeing bills that make buyers walk away instantly. Inventory has exploded. Listings jumped from around 2,800 to more than 5,000 in just 2 years. That's an 80% surge, and it's strangling demand. Builders kept building long after the beer pool shrank, and now entire subdivisions have rows of unsold homes. Many sellers are taking serious cuts to move their properties. 10% drops, 15% drops. Some investors who bought at the peak are losing even more. Cape Coral's flood risk is another landmine. New FEMA maps and updated floodplain restrictions have shoved thousands of homes into higher risk categories. That automatically means higher premiums and stricter lending requirements. For many first-time buyers, that's an immediate deal-breaker. They can't get approved, or if they can, the numbers make no sense. Tourism is still recovering too. Airbnb revenue is down, vacancies are up, and owners who counted on strong short-term rental profits are bailing out fast. Local incomes haven't caught up with home prices at all, with median household income sitting under $65,000 and the typical home still in the mid-400s. The affordability gap is one of the widest in the state. Cape Coral is absolutely beautiful: canals, sunshine, boating, a relaxed lifestyle. But beauty doesn't save a market when the fundamentals fall apart. And right now, Cape Coral's fundamentals look shaky at best. Prices are sliding, insurance is crushing budgets, and demand is drying up. It's the perfect recipe for a deeper correction. So there you have it, the 10 Florida's cities most at risk for serious home price drops in 2025. Whether you're a homeowner, renter, investor, or just watching the market out of curiosity, understanding these trends helps you make smarter moves. Florida is still one of the most desired places to live, but these numbers don't lie. The state's housing landscape is changing fast. If you found this breakdown helpful, hit that like button and subscribe so you don't miss the next deep dive. And let us know in the comments, what's happening in your city? Are you seeing more for sale signs? Are prices dropping? We want to hear your stories. Thanks for watching, and we'll see you in the next one.